Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 2nd of September 2025. Now, the US was closed overnight for Labor Day weekend. So instead of doing what the normal journalist pundits do and focus on European markets that no one cares about any other time, I'm just going to cover what's going on in the commodities and essentially try and cover some of the some of the movements in other bits and pieces. So but silver busted to fresh 15-year highs overnight, and we've got that. It's up around about 3 or 4%, but then platinum and palladium also did jump up there as well. But just looking at the equity markets here for now, we did drift off a little bit yesterday with our big brother. Futures was up in the US around the 0.15 sort of region, so a little bit better bid, but it probably nothing to pay too much attention to. We do have a couple of these hourlies turning to a strong sell. I mean, look, they're not particularly, from an investing standpoint, much more a short-term trader sort of indicator from an hourly, but we are seeing some of these dailies turn neutral or from strong buys into buys or neutrals, particularly the ASX there is just starting to turn a little bit. The Nasdaq particularly, I wouldn't pay too much attention to the hourlies for these things if you're coming from an investing standpoint. And the Euro stocks, the European exchange, has turned neutral there as well. So the Hang Seng had a pretty positive day, but really apart from that, you've got we were, as I said, we were closed in the US, so they're just the 5-day moves in the US there in the light blue. The Nikkei headed lower as well. So we do have some earnings kind of left over for the rest of this week. Zscaler is in the cybersecurity sort of front, Broadcom in the chips, Salesforce, which is probably one of the early monetizers of AI, and HP, which we don't really hold out a lot of promise from. It could have a decent result on the back of Dell being a direct competitor of Dell, and Dell didn't have a great one. So sometimes they can just sort of eat each other's lunch, but sometimes it's just the sector's broadly bad. So there were some sort of fringe economic numbers out on over the course of the weekend as well. The Fed releases some credit card numbers, and one number that really shocked me was 90 days in arrear credit cards is at the highest level in 14 years now in the US. So that's not a good sign moving forward. It's not going to be good for the consumer if they've maxed out their cards. And that, however, bit of a leading indicator, it can be at times, but potentially not massively reliable, particularly with the invention of pay in 4. So which sort of after pay and the Zips of Australia pioneered, and then Apple and Amazon and those guys took over. So look, it's one of those indicators that you use as a broad guide in combination with a bunch of others. Credit spreads at the moment are still very, very low. So that's the difference between junk bonds, which should be paying a much higher yield, and government bonds. That spread is very narrow, which is very common leading into a pullback. But if they start to, if the junk bond yields start to head higher, which means if you're a poorer credit rating, if that gap starts to widen, that's usually a precursor to a fairly significant move in the market overall. But at the moment, sitting at really tight lows and very contradictory to what's happening in that personal credit market at the moment. So really, that's, to be honest, outside of silver, as you can see here, gold and silver and platinum are absolutely roaring here at the moment. Silver's busted through those 15-year highs. We did have a chart there yesterday. So on a 50-year average of the gold-silver ratio, which is how many ounces of silver have to make up an ounce of gold. Silver's extraordinarily cheap. The 50-year average is silver should be priced at around about $65. Currently, we've been a long-term holder of silver, and we still are on a leverage front via structured products, via silver miners, via physical as well, an ETP, MAG, the ETF, and busting through this 40 level has been super key here. And obviously, you can see it's just going gangbusters now. It's up another 2.5% there overnight, nearly at $42. But when this thing gets a wiggle on, it does tend to get a bit of a wiggle on. I mean, platinum, when I started in the 90s, was somewhere around this price, and gold was like a couple $100. Now gold's $3,500, and platinum's really gone nowhere. We had a 40% rally in platinum just recently, and and silver's really the last one of these precious metals to go. Interesting little facts about silver and platinum particularly is all the countries that Trump's picking on, Mexico, South Africa, Russia, well, probably not so much Russia, but, he's threatened sanctions. Like pretty much all of the world's, the absolute lion's share of the world's silver, platinum, palladium all come out of Russia, South Africa, Mexico. Silver, Mexico. Platinum and palladium, also Russia and South Africa. There is some in Alaska, that's very hard to get to, obviously. Not particularly hospitable up there weather-wise. And but yeah, you're just starting to see that, just starting to see those precious metals start to head a little bit higher, which is a bit of a safe haven demand, which could be maybe an early warning sign potentially. And there is a lot of people talking about this September weakness and seasonal weakness that I've been talking about for quite some time. That makes me sceptical that it's actually going to happen. It doesn't seem to be, things don't tend to move when everyone seems to be on it. But we shall see how it plays out over the next few weeks. I mean, my catalyst really is payrolls. And if payrolls comes in with a solid number, then to be honest, I would probably be a little bit wary of that September seasonal weakness. That's out this Friday. US obviously comes back online tonight. Congress comes back this week as well. Potential government shutdown. I dare say maybe that's what a little bit of this precious metals demand is on. If they have a bit of a bum fight in the in Congress and that usual circus about lifting the debt ceiling, etc., then the US dollar might head lower, and it has had a reasonable run of late. But we're going to get those rates down. So for silver here, as you can see, supply and demand. This is mining visuals. It's a little bit old, but I think it's a year or two old. Look, demand is not only for electronics, surgical instruments, solar is a massive one as well. The industrial use of silver is really gone through around about the 70% mark. So as well as being a store of value traditionally in the past. So, and I believe that now global central banks are holding more gold than US treasuries as well. So, I think they'll start to pick up some silver as well. So we are, we are looking at that rally continuing at least for the next. Well, I can see this thing going for at least another 40 to 50% overall, but it won't just be necessarily in a straight line. But look, that bit of a short one today. If you are interested as well, Hyperscaling AI free webinars on at 12:30 today, Sydney time. So roughly in about 4 hours time, or 3 hours and 3/4, being that it's 8:45 here at the moment. So you can go and register. It's all over our socials. And I might probably put it live as well on X, on YouTube, and on LinkedIn for those who are interested. We've had actually pretty high demand. We're largely, the amount of seats in the webinar are largely filled now. So thank you for those who have subscribed, and hopefully we'll be able to push this out live as well, so you'll be able to capture that, in a few hours. So pretty interesting topic, not just around the Mag 7, but around those sort of fringe stuff. But so catch that if you can, and yeah, so wish everyone a good day, and we will chat again tomorrow. Hopefully, when it's a little bit more interesting and we get some lead from the US. Cheers. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.